and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on cryptocurrencies and our guest is Bob Jenkins, Global Head of Lipper Research at Refinitiv. Well, if you're an investor in cryptocurrency, your nerves might be a little frayed at this point in the year, as more major financial firms and companies, including the likes of Tesla, embraced the emerging asset. Prices soared, with Bitcoin rising to $65,000 in April. Yet, in typically capricious fashion, it's since slumped by half. Last week, it very briefly wiped out all its gains for the year. According to analysis by JP Morgan, many large investors left the market after the first quarter, and some shifted that money to gold. But these wild price swings have been a defining characteristic of Bitcoin throughout its 13-year life, and so this year is no different. But while many have embraced Bitcoin as here to stay, cryptocurrencies now face two new and significant headwinds. The first is a regulatory crackdown from countries including China and the UK, and the second is the growing concern about the amount of energy cryptocurrencies consume and whether they're contributing to climate change. Well, let's break this down with Bob Jenkins from Refinitiv. Hello, Bob. Thanks for joining us. To start with, can Bitcoin really be a source of value?
Let's just think about, first of all, what's the basic crypto premise, right? What has been the defining characteristic that has made it attractive? And it's really kind of always been this notion of a decentralized currency platform existing in what they call a distributed ledger. So it involves multiple confirmations across the user base for all the transactions, which theoretically makes it more secure than transactions being controlled by just a few humans. So it's got this notion of a seamless and secure transaction environment outside the control of a central authority. So that's always been kind of the key to it. But in addition, crypto has also been seen, particularly of late, as a store of value for both individual investors as well as corporations. Put simply, it's a finite asset, kind of like gold, which apparently gold can exist in 2 Olympic-sized swimming pools. Well, crypto only has about 21 million that are going to be allowed to be mined, and we're at 19 million right now. So that finite asset nature drives valuation. Increasingly, also, it's being used as a parking place for corporate cash reserves. So very famously, Tesla and Square are big users, and there's even a company called MicroStrategy that's pretty much bet its entire business model on crypto by investing $3 billion in Bitcoin. So all these firms are holding crypto on their balance sheets, but the volatility that you referenced, Elena, that's a problem. So when you have the kind of decline we've seen over the past 6 weeks or so, that creates a write-down that's going to happen most likely with crypto on their books.
Part of the point, as you were saying, is that cryptocurrency is free from central bank regulation, but the regulators are firing back in various countries, including China and the UK. So what will the impact be?
To your point, governments are getting a little concerned. When you think about China in general, it's got a couple major sensitivities. Number one, they do like to control the currency a bit. That helps their economy. And crypto, of course, is outside of their control. So they're taking very substantial steps to rein in the use of crypto by their citizens by reducing access to the exchanges and also reducing access to other crypto digital wallet platforms. Similarly, as you mentioned at the outset, Binance was been banned by the UK, and that's the world's largest cryptocurrency exchange. So these are two significant blows to the use of crypto and as a fiat replacement. Central banks also are developing their own answers to crypto, and across the major economies, including the US and China, they're developing cryptocurrencies to essentially run against their current currencies. And this is sort of a non-regulatory way, if you will, to bring about control in the space. And I think finally you also have just regular banks. They're introducing so-called stable coins, which are these essential cryptocurrencies that kind of exist as a bridge between transactions of fiat currencies and crypto. So a lot of things are all kind of coming together to rein in crypto.
Another major problem, of course, as famously recently pointed out by Elon Musk, is the amount of energy Bitcoin mining generates. If cryptocurrency could be mined with clean energy, would that make a difference? And is it even possible?
It is, and it is being done. And to your point, Elon, first of all, said, I'm going to let you buy Teslas from me, Tesla cars from my firm, using cryptocurrencies. And then he got a sense of how much the environmental impact was and decided to walk that back a little bit. And that, of course, was one of the main reasons where we saw that kind of upward spike and downward spike in the currency that we've seen over the past 6 weeks. Mining crypto, as they call it, requires substantial energy consumption. I mean, the total amount of emissions from mining generally equals that of an entire country on a year-to-year basis, such as the size of Sweden or Greece. Because what happens is you actually have to solve these cryptographic puzzles, and that's done through multiple servers. And then they all have to confirm that you've solved it correctly in order for essentially the crypto to be released. And recent estimates have said that every billion that goes into Bitcoin is equivalent of almost 1 million new cars on the road. So that's causing a lot of these, prominent supporters to back off just a little bit in the same way that Elon Musk has.
Bearing all of that in mind, then, would you advise investors to hold Bitcoin?
Given that its actual use case as a currency is still very much undetermined, it's considered a long-lived asset, particularly here in the US. That means that when you actually use it to transact, you're going to have to settle your capital gains or losses every time you access it. And also, if you think about every day, Bitcoin seems to go up and down by at least 5% and sometimes double digits. And how do you actually transact on a large ticket item? If you buy a car, someone's going to be very happy and someone's going to not be so happy after that transaction settles off if you're using Bitcoin. And even its role as a store of value has been showing some cracks of late with that, again, that extreme volatility and the seemingly almost meme stock behavior that it's actually characterized by. I would put this in that speculative bucket for now and only hold assets in Bitcoin that you're fine with having tied up for a long time and that aren't critical necessarily to your wealth building goals.
Thanks so much for that. That was Bob Jenkins, Global Head of Lipper Research at Refinitiv. Well, before I go, here are some of the top stories in the crypto space. A top US diplomat said she hoped El Salvador and the IMF can complete a financing agreement after the country's dramatic decision to make Bitcoin legal tender from September the 7th. The comments were made by the US Undersecretary for Political Affairs, Victoria Nuland, after she met with El Salvador's President Nayib Bukele on Wednesday. El Salvador's Congress has already approved a law that would put Bitcoin on equal footing with the US dollar, which became its official currency 20 years ago. The IMF said it is concerned about the decision, although it said talks on a $1 billion financing agreement are ongoing. Australia's securities regulator said it is consulting market participants on the management of crypto assets. The Australian Securities and Investment Commission said it sees a real risk of harm to consumers and markets if crypto-backed assets are not regulated properly. It's proposing the establishment of good practices with regards to pricing, ownership and risk management to protect retail investors and maintain fair market practices. And Cathie Wood's ARK Invest is teaming up with 21 Shares US, which has filed with the US Securities and Exchange Commission to create a Bitcoin ETF, making it the latest fund manager to attempt to cash in on the growing interest in cryptocurrencies. ARK will provide marketing for the proposed ETF. Wood has been a vocal supporter of Bitcoin, and her flagship ARK Innovation Fund owns about $820 million of shares in Coinbase, making it the fund's 10th largest holding. 21 Shares' application to the SEC follows a recent filing by Fidelity and CBOE Global Markets. The SEC has yet to approve a Bitcoin ETF. And that's your roundup of cryptocurrencies. I'm Elena Casas, and this is Reuters.